All right, welcome back for another episode of Carnivore Trade. Today is Tuesday, September 13th, 2022. If you're not done so already, give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. By the way, just booked number 24 in a row. I'm telling you guys, get in on this. If you want to be able to navigate this market, definitely feel like I can help you out. We've been having a killer year so far. Speaking of killer, complete beat down by the bears today. Bulls absolutely killed here today. Take a look at this 10-minute intraday time frame. Spiders having its worst day since June 2020, down almost 4.5% here. Nasdaq is down 5.5%. Dow down over 4 here. You see the semis down 6. Apple down 6% here. Nvidia down 5.5%. Tesla, actually the strongest one today, down just 4% here on the day. Total beatdown, total bloodbath across the board here. And I had some max downside moves this morning for about 394.50, and that got clipped very easily. And you can see here, if I draw in on the hourly, in basically one day here, we've lost not only the 618, but we lost the 7.5 retrace as well in one day. And all that short squeezing was really for nothing. We had, and I said yesterday, I could even see a gap up here and then a fade. I said gap up into 415 or so. And then I thought we would fade here after that. I didn't think it would come this sharply. But if you look at the ES, we actually did get up there right off of the initial knee-jerk CPI number. Obviously, that came in, hotter than expected. We all know by now what happened. And you got up there. There's the hourly. Let's flip over to the 10-minute here. Got up to that area. So technically, it did go up there and touch that target, but didn't quite happen. Obviously didn't hold the gains by the open as we just bloodbathed all the way down right into the open. Little dead cat bounce, intraday bear flag, and then market's just puking here. And part of the catalyst here, I think, is, well, the catalyst was that the U.S. just put sanctions on China because they think it's going to stop them from invading Taiwan. Market doesn't like that. Obviously, there's some uncertainty here. Point is, we knew the market was going to go lower anyway. I didn't think it was going to have, by the way, look at that futures candle there. That is insane. Look at that sell-off there on the futures, wiping out that gap there. Just right back into this channel here, right back into that old kind of bear flag that we were talking about here on the futures. What a beatdown, heavy volume. And then take a look at the spiders volume as well. Market's closing in about 4 minutes. So we're over 100 million now on the spiders. And so volume is back, big boys are back. And they came out to play. And it looks like this here, and I said this yesterday, I said, look, this is today, as in yesterday's price action, feels a lot like August, specifically right here. Light volume, Apple doing all of the work, just bonds not confirming the move, and today just total wipeout. Look at the volume there. Speaking of Apple, what did I say yesterday? If Apple is flat or negative today, the market's probably down, and Apple's down big today, and that's taking the whole market with it. So you live by Apple, you die by Apple, I guess. Pretty good volume there on that sell, matching yesterday's volume here. We'll probably exceed it on the market on close, but look at this volatility. This is basically a $3 trillion company, up 4% yesterday and down almost 6% today. Not normal. Not normal, guys. If you guys are new, this is not something that normally happens. And by the way, I was just telling my traders like an hour ago, this volatility is here to stay. It's going to be here for a little while, for the foreseeable future. So be on your toes. I can't stress the importance of being nimble in this market. I'm not going into a lot of positions, with a full position. I'm going in half, sometimes a quarter of a position to start. And you have a little bit less exposure, but you're not at risk. I mean, think about all the people that FOMO'd into calls here yesterday. Oh, it's a new bull market. We're going back up to the highs. And they're getting absolutely destroyed today. So, and then not late last week, the people who were buying puts into the hole, and they just got crushed for 4 days in a row. So you got to be nimble in this market. Wait for the levels, but this is a trader's market. I'm absolutely loving it, to be honest. I mean, this is, you know, a trader's dream here, but the volatility is very intense. You know, if you can't handle it, I'd just say stay on the sideline, stay in cash, honestly. But I mean, this is my type of market here. I'm really loving the volatility. Getting a little bit of a bounce here as we head into the close. Got about 2 minutes left here, so a little bit of probably some short covering, shorts taking profits. I took some profits today on our SDS, so that's 2 times short the spiders. That was the 24th winner we've closed out in a row here with Carnivore trades in a row. The second time this year. We had 21 winners previously from January to February. That was our previous streak, now at 24, so looking to keep it going here. But wow, I did not expect this type of move this quickly today. Honestly, usually with Opex week, you know, I've been saying that usually with Opex week, you don't get this type of a big move. You'll get volatility, good whips, but usually these big types of moves don't happen during Opex week. I think there's a good chance if we don't get news, I almost feel like there's going to be something that comes out after the close, maybe tomorrow, that's going to panic, like somebody knows something. I don't think that maybe it was just China, the China sanctions that caused that that secondary dump. I mean, we were bear flagging intraday anyway. So, I mean, we were going to dump regardless. And it's not like there was one big panic candle where the algos freaked out on the sanction news. This almost feels like, this is a controlled sell-off to me. And speaking of that, if we look at the VIX, you know, it did finally crack that 28 level, but some call sellers did step in a little bit. So finally back down basically at that 27 area. And we talked about that the last couple of weeks. They've been selling calls above 27 on the VIX. So if we don't get some type of news, I think there's a good chance we could base here, at least for a few days, and maybe kind of chop sideways. Again, it is still Opex week, so we do get those types of moves. But, you know, overall, the bulls just got punched in the mouth. Bears slammed the door shut right at that 618 retrace there. And, I mean, that coincided with that pivot low. Actually, excuse me, it was a 50% fib, not the 618. And there's the closing bell there. But yeah, right there at that pivot low, 411.39, high of yesterday, 411.73. So basically got right there. Look at the volume market on close there. 111 million as of the close. Big volume there. You had a little bit of short covering going on in there, but a huge sell-off here. Anyway, you slice it or dice it. Wow, okay, so let's take a look here at a few sectors. Triple Qs notably weak, so closing down 5.5% here. Basically, you know, I mean, this isn't far off the lows here. So 290.87. 293.70 was the close. This is basically back to the lows, and this has been soft all year long, and that continues. I mean, look at that, rejected at that 20 moving average, so you couldn't even get back above the 20. Definitely a sign of weakness there. Apple obviously dragging that down. Again, Tesla was really the lone wolf that was strong, finished down 4% here, but you know, you can see intraday this held up much better. Look at how beat down Nvidia got. Microsoft took out the lows from last week there on a closing basis. Let's look at Google. Man, Google, this thing wants to go to $100. I mean, this is Meta. Let's take a look. Meta, yeah, look, new 52-week lows on Meta. Pretty amazing stuff here. Flix, down 7.5%. So big move there for Flix too. Let's look at Amazon. Yeah, nice little dump there for Amazon. Still holding up a lot better though. But still down 7% today. Amazing move here. Semiconductors noticeably soft. So again, 1-2 little outside candles. We talked about how they needed to finally do that. They did, but now you're right back in that range. So if you just take, you know, if you just assume like this is your previous bear flag we were talking about, you're right back inside of that channel now. So semiconductors, again, remain weak. And, you know, this is something that, you know, one of your red flags here was really Nvidia, I think. So Nvidia had that nice bottoming tail with volume, and it had a really good chance. I mean, this is as good a chance of it to rally as you're going to get. You get the bottoming tail, you get a retrace candle, and then no follow through. Absolutely no follow through. You know, look at the triple Qs. They actually had a little counter trend pop there. Nothing for Nvidia, nothing for AMD. Making new lows, new 52-week lows on Nvidia as well. Semis on the soft side. IGV. A little bit stronger here, relatively speaking. You know, it's a little bit farther off the lows. It filled that gap, but it's much farther off the lows today, down just 4.5%, which, you know, it's a big move, but considering, you know, where we were on the 6th of September and relative to where the Qs are, the IGV's held up a little bit better. So a sector of strength, I guess, but still a beat down across the board. Biotech here, down 5%. Again, still holding up a little bit better than the rest of the market. But a nice little sell there. And then the transports getting hit really hard, down 3.79% on the day. Did manage to fill that gap there, but still a really good sell. Again, you know, essentially a 20 moving average rejection there on the daily. It's trying to hold that pivot right now. So we'll see if it can do that for the rest of the week. Again, I think there's a good chance, unless we get news or some type of big gap down tomorrow, we could chop sideways until Friday. So we'll be on watch for that, but nice sell across the board here. Interest rates, 10-year, up 1.78%, close to 52-week highs there. 30-year, continuing, making new 52-week highs, but came down flat. This is signaling recession, guys. ZT, that is 2-year Treasury note, that it made a new low since 2007. So that is, I don't know how far this one goes back. Yeah, this goes back to 2009. But look at, first of all, look at that sell-off there on the 2-year. That's insane. That's a huge, huge sell-off there. And if we flip over to good old TV, 10s and 30s taking a dump, failed inside bar. 3-month 5s and 10s inverted again, failed inside bar. 3-month and 10-year starting to come down really close to that flat line there, and 2s and 10s taking a beating today as well. If we look at the 2-year here, I believe we can see, we can probably go back. This one probably goes back farther. Yeah. So this is, yeah, so since 2007, that's where the 2-year is. And you're telling me we're not going to go into a recession? This is what I've been saying the last couple of weeks here about the bond market. If these rallies were real, the 2-year yield would not be taking a beating. So, or I should say the 2-year note shouldn't be taking a beating. But anyways, big move down there. HYG also down 2.25. So nice little sell there as well. Home builders, XHB down 6%. ITB, again, new low there. Looks like you just held that double bottom by the close, but down 6.5. VNQ, real estate ETF down under 4%. This one had a nice move off the lows, but again, a good beat down here today. XLF, another strong sector, down almost 4% here. Basically held that 50 moving average by the close, but erased all of those gains there out of the last 3 trading sessions. And then the XBD, remember we said, maybe this can have a move up to that red bar. Looks like that got rejected as well, back below the 20 and 200 moving average. So a pretty good sell there for the broker dealers. Let's get into crude here. So crude, Biden administration today really just made the dip buyers in crude happy, because essentially they came out and said that we're eyeing refilling the SPRs at $80 a barrel, which is kind of funny to me. But in any case, we had a nice little dip here. It was testing the lows of yesterday. And honestly, this did not look good intraday. I did not like this candle, but as soon as they said that, crude got a huge bid. Was up about $2 in, like 30 minutes. So a nice move there for crude. Again, yesterday we closed above 87.76. So that is a negation of that breakdown bar. The weekly time frame still, I want to see a little bit more here. I would like to see a close above 90.39 by the end of the week to really kind of cement that. But nice little reversal there for crude. And yeah, I really like energy down here. XLE. Again, energy is a strong sector, but when the market's down 4.5%, the energy is going to be down too. And that's the one thing I tell everybody to be cautious with. If you're buying energy stocks, they're not, they're going to hold up better because the fundamental case for crude is better, but they're not going to, if the market's getting beaten down and we're having margin calls, everything's going to be down. So that's the thing with XLE right now, but was down 2% here, and XOP down 2.75, OIH down 4. But again, still strong sectors in a weak market. Nat gas up 2%, so starting to inch up here. It's kind of hanging in there. I'm a little bit neutral on it at the current time, but it's getting a nice little bounce here. Again, if you're long from this trend line, just trail your stop and protect your position. Dollar index, it just does not want to go down. Huge move. Look at this outside candle. 1, 2, 3 days of selling wiped out. Again, that 50 moving average continues to hold up. The only problem is that you're parabolic on the weekly and monthly. So, at some point this is going to come down pretty sharply. But right now it is holding up really well, and you got to respect it for the time being. Gold here down a little bit as well, down 1.5%. But again, GDX remains strong. And really up until I know it doesn't look great because it was down 4%, but really until the last hour when the market really started to puke, this was holding up really well. And a lot of gold miners on my radar were holding up well as well. And I really see it outperforming the price of gold. So that is still telling you that smart money is accumulating here. Doesn't mean that the gold's going to bottom just right now, but it means that smart money is accumulating. So we're definitely keeping an eye on that. Silver, this is everything you wanted to see from silver. I would have preferred to see it finish a little bit off the lows here, but you do have the potential for a nice inside candle above the 50 and the 20. So if this starts to flag, this will have legs to the upside there. Platinum also coming back in a little bit, but again, look at the surge there off the lows into that 100 moving average. It hit a 618 as well today. So right there, there's your 618. So no surprise it needed to pull back there. I thought it was going to pull back right here, but it had one more surge. So we'll give it the benefit of the doubt. It was down 3%, but it was a little short-term overbought there. So that is to be expected. And then palladium, much weaker still. Look at this trend line. This trend line has been such money here, really since March or April. Look at that. So that's where you pulled back off of today. Nice little dip there on palladium, down 7%. And copper here down 2%. Possible lower high in play. We'll see what it does here. You want to see it hold that 340 area. But if there is, copper is a little bit different because it's a little bit more sensitive to recession, which is the market is kind of worried about right now. All right, let's flip over here. There's the 2-year. Let's look at Bitcoin. So Bitcoin giving back all those gains. Here's the daily, nice sell bar there. And, I said, I thought this had a good chance to get up to 23, 24. Obviously, that didn't happen today. You're back below the 20 moving average, just like that. And, I said over the last couple of days, this is most likely just short covering. And I think that's really evident of today, that's really the case, right? So no real major buying, just short covering, and getting dipped pretty hard there. Ether down 6% as well. Nice little outside candle there. That may be a sell the news event with the merge. Doge down 6%, Polkadot down 6%, everything pretty much across the board lower there for crypto. So a little beat down there as well, and pretty much just across the board here. Speaking of short covering, this is kind of what happened, right? So we got down to that 390 area on the spiders. I told you guys I covered my shorts there, and we actually picked up a quick long SPXL, and we got in and out of that. But again, this is just short covering into support. That's really all it is. Now we have potential weekly lower high. So now that we've hit support once, usually the first back test is going to hold, right? And I said the first back test would hold. But now if we put in a lower high and we start to chop around, this support is going to be weak, and we can get through that. So we'll be on watch for that tomorrow. If we don't get a major gap down, there's a good chance we could chop sideways, maybe do some backing and filling. But overall, a pretty solid beat down here for the stock market. Anyways, guys, going to wrap it up here. Come find me on carnivoretrades.com. I'll talk to you all tomorrow.